Welcome, everyone. Hope you had a great week. And this is Shane with Vested Interest. Before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, like the videos. A special thank you to those who have subscribed to the channel. I really do appreciate it. The channel continues to grow because of subscribers like you. For those of you who may be stopping by for the first time, on this channel, we focus on a passive income investing strategy by buying stocks in good companies that pay dividends. It's not rocket science. Anyone can do it. You don't have to be a genius. You don't even have to be that smart. I'm not that smart, and that's what I do. In my opinion, the best way to do anything, keep it as simple as possible, really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies that return a high yield on their capital. I utilize both a dollar cost average approach, consistently investing into stocks within the portfolio on a bi-weekly basis, every 2 weeks at a minimum when I get paid, but sometimes I'll do larger purchases as well if I get a bonus or side job and have extra funds to spend. I don't have a paid Patreon account, so nothing to pay for here. It's free to see what I invest in. I do updates. That's what this one is, a portfolio update for the activity for the week, for the past week. So you'll see that here today. But if you do want to help out the channel, you can do that by dropping a comment down below. Let me know what you think about the videos. Definitely subscribe to the channel if you're into this type of content. Dividend investing, dividend growth investing, dividend stocks, my opinion on dividend stocks. I do a stock pick of the day throughout the week where I cover a stock I feel is undervalued at times, or I'll say, it's not undervalued. It's not one that I would like to purchase, but I will cover stocks as they pull back throughout the week, and we'll take a look at them together, and you can make up your mind on whether or not to invest. I also have a link to a Webull account that I use. If you want to utilize that link, you'll get some stocks. I'll get some stocks. It's another way to help the channel. You don't have to use the link, but Webull is an account that I like to use. I also use Ally Invest, where I have not only my investment account, but also my banking is done there as well. Good Ally Invest is a good bank if you don't have a bank or are looking for one. Not affiliated with them, just what I like to use. With that said, as you can see on the screen here, this week's portfolio update, we're going to look at the activity from the previous week. We reallocated $4,544 into the portfolio, so we sold out of a few positions. So we'll take a look at those positions that we sold out of, what we did with those funds, and we added an additional $2,788 to the portfolio. I actually took some gains out of my Webull account, selling off some of the BABA that I had. I had been buying it around $80, and it went up to 109. It actually went up to about 118, I believe. And as it dropped back at 109, I sold it. I think it dropped down to back into the high 90s. It's right around 104 now. But I took some of those profits and I bought some more dividend growth stocks, as well as my weekly addition, which is usually around $1,200 to $1,300. So let's take a look at what we did in the portfolio for the week. So we started out the week on the 14th, June 14th. We bought 11 shares of Vale, ticker VALE, and Vale is in the material sector. It's a mining company. We picked those up for $15.97, and this is one that has a very high yield. I think it's around 14 or 15%, and it has pulled back even further. I think it's sitting around 1480 or 1490 currently. So this one even dropped down below. My cost basis is around $14.40. I was buying this last November when it was around $12. So I've increased my cost basis over the last 6 months or so, 7 months. Next up is our first one we sold, Brookfield Infrastructure Partners, ticker BIP. They actually did this is more shares than I bought, 46, shows that I sold 46 shares. They actually did a stock split where they gave out some additional stocks, but then dropped down the price. As you can see here, I was buying it in the 40s and 50s, and it ran up to as high as the 60s and 70s. As you can see with the stock split, it dropped the price down to $39.40. And it also dropped the dividend payout from around 54 cents to 36 cents. And when I did the math on that, I actually lost about $40 in dividends annually. So this is one that I had some gains in. I was up about 9% on this one. So I figured I'd lock in those gains since they did the stock split and the dividend kind of dropped down. It was one that I was comfortable taking the gains and rolling into some other investments. So I sold those and picked up $1,812.38 to reallocate that into the portfolio. And with those $1,800 from the sale of Brookfield Infrastructure Partners, I added some $1,311.52. And with those funds combined, we picked up 2 shares of 3M Company, ticker MMM. This is in the industrial sector. We picked them up for $136.14. This is another one I believe is in 128 or 129 now. So this has continued to drop down. I will continue to add a couple shares of this if it stays below $140 per share. We picked up 4 more shares of LyondellBasell Industries, ticker LYB. Another one, this is in the material sector. At $98.86. Another one that I believe has continued to pull back. Anything under $100, in my opinion, is great for LyondellBasell. These are both above 4% yield. 3M is almost a 4.2. IB LyondellBasell is actually probably creeping up towards a 5% yield currently. We added 6 shares of Realty Income, ticker O. This is a REIT at $63.44 per share. We'll continue to add Realty Income. I'm trying to get this one to 100 shares. This is a monthly paying REIT, as well as Stag Industrial, another monthly paying REIT, ticker STAG. We added 6 more shares there at $30.67. Both of these have continued to pull back, trying to get both of these to 100 shares in my portfolio. Another high paying yield here, Omega Healthcare Investors, another REIT, added 6 shares there, ticker OHI at $27.83. This is north of 8% dividend yield, so I love adding these higher yields. Realty Income and Stag are both creeping up on 5%. I believe Realty Income may be over 5% now. We picked up 20 shares of Siboney-Stillwater, ticker SBSW, also out of the material sector at $10.96. We picked up 4 shares of Prudential Financial, ticker PRU. This is out of the financial sector at $95.61 per share. Anything under $100 for Prudential, in my opinion, is a buy. We picked up 4 shares of Johnson & Johnson. It finally dropped back below 170. I hadn't been buying it as it crept up over 170, almost to $180 here recently. I kind of just set a price, and if it stock that even if I like it, I really like Johnson & Johnson, even if the stock goes above the price that I like, I'm not going to keep buying it. So 170 for me is where I'll buy Johnson & Johnson. Anything under that, anything over that, I'm just not interested. So we added 4 more as it dropped below 170. Hopefully it's actually back above 170 now, but I'd like to drop down to the mid 160s, low 160s, even high 150s, so I can add, maybe 10 or 15 shares in 1 week if it did that. We added, and Johnson & Johnson is out of the healthcare sector. They are actually going to be doing a spin-off here soon as well, because they have some products out of the consumer staple and consumer discretionary sector that I think they're going to spin off that consumer brand and split those in 2. So you'll have a healthcare sector and a consumer staples, I believe, sector. We bought 5 more shares of Kraft Heinz. Kraft Heinz has finally dropped down below my per share cost basis, so we're adding some more there. Ticker KHC. This is a consumer staple. We bought 6 more shares of Store Capital, another REIT. So as you can see, we went real heavy into the REITs this time, as well as the material sector, with several in the mining sector. And also, most of these are high yielding. Johnson & Johnson is about 2.7. Prudential is over 4%. Siboney-Stillwater is in the teens, I think 12 or 13%. And Store Capital is over 5% dividend yield as well. So a lot of high dividend yield. Our dividend yield overall did increase. You'll see that here in a minute. We added 2 more shares of Verizon, ticker VZ, at $49.43. For Verizon, at least for me, anything under 50 is a buy. So we added 2 more there, another high dividend yield, over 5%. And we had a little bit of funds left over, so we added 1 share of Huntington Bank, ticker HBAN. And Verizon, if I didn't mention it, is out of the communication sector. Huntington Bank shares is another in the financial sector. So as you can see, I'm seeing value in some industrials, some REITs, and finance, and 1 healthcare and consumer staples. That's where I'm seeing the value right now. Even communications there, Verizon remains cheap. It's been cheap for a long time though. So next up, on June 16th, we sold out of 2 additional positions, DTE Energy. We sold 12 shares. One that I just hadn't been, both of these, again, we were up, I think, about 12% on Merck and about 8 or 9% on DTE, so we locked in those gains. Both I hadn't been adding to in a while, and healthcare, I would rather, if I'm going to be adding, probably add to Johnson & Johnson and take advantage of the price pullbacks whenever I can. Again, with these being over the price that I had set for them, I haven't been adding to them, and with the 8, 9, 10, 11, 12% gains, I'll lock those in and take those gains and buy some other areas that feel undervalued. Again, like the ones I bought on the 15th, as well as the ones you'll see here in a minute. So out of these two sales, Merck and DTE, I picked up $2,731.77. Along with that a little over $2,700, we added $1,300 more in new capital. And with those funds on June 16th, we bought 10 more shares of Bank of America, ticker BAC, out of the financial sector at $31.33. We bought 10 more shares of Intel Corporation. This is out of the information technology sector, ticker INTC. They are a chip manufacturer at $37.32. I think they've even dipped down into $36. Anything under 50 for me is a buy for Intel. So anything under 40 is a steal. I mean, this is extremely cheap. I believe their dividend yield is creeping up at 4% if it hasn't already gone over. Bank of America isn't a super high yielder, but it's around 2.5, I believe. Stag Industrials, picked up 6 more shares of Stag Industrials at $30.60. We picked up, these are REITs, both REITs here. That's a monthly paying REIT for Stag. 6 more shares of Store Capital, ticker STOR, another REIT at $25.30. 6 more shares of the monthly payer Realty Income, ticker O, at $64.63. With the majority of the funds that we had sold, we had about $2,700 out of those two sales. And like I mentioned in another video, whenever I saw Apple and Microsoft at prices I was willing to pay, I might sell out of a couple other positions to do that. So most of that $2,700 did just that. We bought 20 shares of Apple Inc., ticker AAPL. This is the information technology sector. I'm sure you're aware of who Apple is. And then we had it, and that was at $130.76. I would love this to drop into the 120s or below, so I could really, again, maybe pick up another 20 or 30 shares in one big pop like this. There's a couple other, still about 17 positions in my portfolio that I'm up over 8% or more. I mean, a couple positions in the oil sector, I'm still up over 40%. So if Apple continues to drop, like I said, below 120, Microsoft dropped down into the 130s or lower, I would probably sell out of those other positions, lock in those gains, and take them and buy the undervalued assets. We had a little bit left, so we picked up 2 shares of Kinross Gold Corp, ticker KGC. This is out of the material sector, another mining company, obviously gold mining company, and we picked those up at $4.15. Now let's take a look at the overall portfolio. As you can see, I think last week we were at $115,000 in portfolio value. Obviously, the market has really dropped. Actually, this is the first week we've actually had the portfolio overall in the red. So we are currently at total at $108,853.98. So we lost a significant amount in overall value. Now about almost $8,000, just under $8,000, about $7,000 and some change. Our dividend yield has crept up, not only from the purchases, but also from the pullback in the overall value to 4.925. But here is the best part about the portfolio, what the main focus on, because I don't focus on this, I more focus on the annual dividend income. The annual dividend income continues to climb. Last week was around $5,200. Now it's $5,361.26. So as we add to the portfolio, even though it's pulled back, our annual dividend income continues to increase week over week, and this will continue to grow over time as the stocks within the portfolio pay out dividends, buy more shares of those companies that the dividends are paid out from, ever increasing this annual dividend income stream. True passive income for doing nothing other than buying stocks in quality companies, being more of an owner of quality companies over time, and this will continue to increase. We have communication sector, 9.86% of the portfolio. Consumer discretionary, 3.61% of the portfolio is allocated there. Consumer staples, we have 8.2% allocation. Energy at 9.74%. Financials at 11.49%. Healthcare is sitting at 10.26% of the portfolio. Industrials at 12.14%. Technology sitting at 13.01%. Materials is at 6.65%. Utilities has shrunk a little bit with the sale of DTE and Brookfield Infrastructure Partners. Were both in that sector, so this one's down significantly to 1.6%. Actually a little lower than I'd like it. I'd like to get it back up to at least about 5%, so we may look to see some other stocks we have in that sector still we might look to add to if they pull back or as they pull back. In the REITs and real estate sector, this one has crept up to 13.43%. and still have no ETFs in the portfolio. Well, that is the activity for the week. Again, I hope you had a great week. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions, suggestions for future topics, constructive criticism as well. Drop it all down below in the comment section. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time. Thanks for stopping by. We'll catch you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.